Welcome to this new video. So this week might be the most important week of the year. Between the Fed and the ECB, oil flirting with $103,000 and tensions in the Middle East. So the market could explode in either direction. So if you trade Forex, indices or commodities, you absolutely need to see what's going to happen. So the markets are starting the week at their lowest point of the year. The S&P has dropped by -6% over 3 weekends, as we can see here. Okay, the S&P had reached its highest point here, and here we can see that in 3 weekends it went down by 6% as shown. Okay, so each candlestick represents 1 week. Okay, so here we've reached the -6% level. Okay, so as we can see, next we can see that the Nasdaq has dropped by at least 7%. We're going to switch to a daily chart. So as we can see here, in 7 weeks, the Nasdaq has dropped by at least 7.30%. As we can see, its highest point was here. And here we can clearly see that it dropped. It came down to rest on the support level, bullish impulse. And now it has come back down to rest on the support again. Okay, so currently the Nasdaq is in a range, as we can see. So here, bullish impulse, okay, rebound, retracement, rebound, impulse, bullish, then retracement, okay. So currently the Nasdaq is in a consolidation phase. So as we can see, as long as the market, I'm switching to the 6-hour chart now, okay. As long as the market hasn't broken through the support level here, okay, we remain in a neutral trend. So as we can see here, rebound impulse, rebound impulse. Now we are going to move on to oil. As you can see on my chart, we're looking at a 1-day chart, which means that one candlestick represents 1 day. So since the end of February, as you all know, the American-Israeli strikes against Iran have triggered a number of shocks. As we can see, the Strait of Hormuz, through which 20% of the world's oil passes and which is blocked by Tehran. Okay. So the new Iranian supreme leader has decided to maintain the blockade. Okay. So oil is currently at $103, as we can see. So I had the opportunity to enter a position here, okay, on February 27th, as we can see. Here I entered with a lot of 2. I'm up more than $20,000. And with a lot of 0.5, I'm up more than $6,000. So personally, I'm going to hold my positions. I've moved my stop loss here at the level located exactly right here, positioned at the specific level of 80.600. I'm going to illustrate it now. At least this way, it's done. There we go, stop loss. There, paste text there, we'll put it in black. Okay, the thickness, we'll set it like this. Okay, so personally, my position on oil, then I'm holding it. I'm holding it as a buy and we'll see what happens. But I think it's going to continue. It's at least going to reach its previous high here. Next, we move on to the dollar index. We're looking at a 1-day chart. Here, we can clearly see that the dollar is in an upward trend, as you can see here. It completed its downward trend. There we go. Here, we were in the range. Okay, so here it ranged, as you can see. There we go. You can see it clearly. There, you see here, it formed a kind of double top. And now theoretically, it's staying here. So currently, the dollar is in an uptrend and within the range. So if it ever breaks out of the range here, I think it will at least go to around 105,000. Next, we move on to the euro index. As we can see, it's the same for the euro. In any case, when the dollar rises, the euro falls, and vice versa. When it falls, the dollar rises. Here, we can clearly see that we're in a consolidation phase. We can clearly see that the euro is ranging in this area. Okay. Next, we'll move on to the USD/JPY. As we can see on the chart, USD/JPY is in a strong uptrend. So here, impulse retracement, impulse retracement, impulse retracement, and so on. So currently USDJPY is in a strong uptrend. Here we can see that it broke through the resistance, then it made a pullback before moving up again. Next, GBPUSD, downtrend as we can see here. In any case, as you can see, we have lower highs and lower lows. So on GBPUSD, we are literally in a downtrend. Here, I have illustrated the round number zone at the 1.32600 level. We can see that it literally broke through it. So the scenario remains bearish. Next, the S&P 500, we can clearly see that it dropped by 6% over 3 weekends, but it is still in an uptrend. As we can see here, we have the 200 period moving average following the price, and we also have the Ichimoku cloud accompanying the price. So let's switch to the 6-hour time frame. On the 6-hour chart, we can clearly see that it's ranging between the highs, as shown here. Okay, and here we have, I'm going to illustrate the support. As we can see here, it came to test the support, then bullish impulse, and now it's coming back. So either it bounces off the support to move back up, or it breaks its previous low. Okay, so let's stay focused and vigilant. All right, next we're going to move on to stocks. Okay, as we can see here, we're looking at the stock market heat map. Nvidia, over 1 month, we can see it's down 6%. Google down 5.23%. Apple down 8%. Meta down 8%. Amazon down 0.19%. So the biggest stocks are all in the negative. As we can see, whether it's tech, commercial, or healthcare sectors, most are in the negative. Only utilities and public services are in the positive. But otherwise, in most cases, even Tesla is in the negative. All right, so stay vigilant for the upcoming week from April 16th to 20th. Stay vigilant, stick to your trading plan. Okay, above all, especially your money management. I advise you to risk, for example, if you usually risk 1%, I recommend risking 0.5% to 0.25%. No slip-ups, stick to your plan, stay vigilant. In any case, there are always opportunities, and there always will be. I wish you a very good trading week. Remember to subscribe, leave a like under the video, and I'll see you very soon on Process Trading Live.